What are the reasons behind a sell-off? This is the Specialist Trading Weekly Stock, E-mini, and Forex lesson. Hello everyone and welcome. My name is Stephen Primo. I am the president and founder of Specialist Trading. And in this week I'm going to answer that question, exactly what a sell-off is and how to spot it. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using our proprietary techniques in spotting a sell-off. But please remember that we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's stock, E-mini, and Forex lesson. All right, as I stated, I am usually asked this question by many members in our courses, regardless of which course, whether it be stocks, E-mini, or the Forex courses. Many people want to know the reasons why, or why did a sell-off particularly start to happen? Is there any way we could have protected ourselves? And once again, I was reminded of this with an email that was sent this past week. It starts off by saying, "Dear Stephen, I hear a lot about market sell-offs, which I do not fully understand. I wondered if you could maybe explain this to us in a weekly video, giving us some insight into A, is it the big players doing this? B, what might we see on the charts during these times? C, are there any warning signs? And finally, D, how might we trade them, if at all? Best regards, AF." Once again, this is a very common question that is addressed to me, and actually this is the way I used to question sell-offs or different environments and different things that would happen in the market when I was first starting to trade on the floor of the Pacific Stock Exchange. In fact, I would constantly ask my mentors, well, why did this happen? I don't understand. All of the news or the indicators pointed one direction, and this came out of the blue, either a sell-off or a rally. So why? As traders, we always want to know why. Why did this happen, and what are the reasons behind this? And I recall my mentors looking at me and basically all giving me the same answer. And what they said was, "Steve, don't look for explanations. Don't look for explanations whatever the market's doing or whatever the market environment currently is. What you should be is just reacting. In other words, just react. Don't care or don't put too much emphasis on why something is happening." And I remember I asked these very same questions to my mentors. Why was this happening? Because as traders, we, for some reason, are taught that we have to know the reason why. And the way they explained this to me was, they said, "Steve, imagine you're walking down the street, you're standing next to a friend, you're at a particular stoplight, and then it starts to rain. In fact, it starts to pouring rain. And you're just kind of getting there, standing on the street corner, waiting for the light to change, and you're getting soaked. Now, do you want to know at that moment why it's raining? Do you need to know why it's raining? There's really no reason why. You just have to react. In other words, either quickly get some shelter or pull your coat over your head or get an umbrella. In other words, what you have to do at that moment, in the heat of the moment, is react to what the conditions are. There's nothing that's going to help you to understand why it happened. Now, if you're a long-term investor, if we relate this back to the markets, if you're a long-term investor holding a position for 5, 10, 20 years, then sure, you have to know the reasons why, because this will help you in terms of a long trend type of investment. But if you're basically employing the strategies and techniques that we use at Specialist Trading, which can last anywhere from a day to a week or two, there's no reason to know why. You don't have to fill your trading plan with what was labeled to me when I was learning as useless noise. These are only things that clutter your trading and take you away from being successful. For some reason, we were taught that if we understand the reasons why and we fully diagnose everything and dissect it and take it apart, we'll understand why, and this will be better, make us better traders. It's actually the opposite. When you really simplify things and just react and go with the flow, you become a much better trader. So ultimately, my mentors taught me not to look for explanations, not even to care, just to react. In other words, everything's right in front of you. If the market's going up, well, you want to go along with it. If the market's going down, then you want to go along with it. That's really it. That's really the secret to success, not understanding why it's doing it. What they told me was, "Steve, when you ask why and look for answers to the market's actions, you turn those answers into a crutch. And if you continue to rely on these outside crutches, you will automatically and eventually take yourself out of the game." You see, if you put too much emphasis on these outside sources to always feed you with information so that that's the reason why something happened, you're going to ultimately rely too much on them, and they're going to be a crutch for you. And then if things don't make sense or it didn't work out the way it did before, you'll fall prey to that victim attitude where, like, something happened and poor me, I didn't understand why it happened, and so I'm a victim in this case. When you become a victim, it's simply because you've taken yourself out of the game. You've given away your power to something, some crutch, to allow it to make all the decisions for you. So if you look for reasons why, you're going to be looking for a reason to substantiate why the market is doing something, and if it doesn't fit that, you become a victim. So never look for reasons why, just simply react. Now someone, especially beginners, could say, well, that's easier said than done, but this is what we do at specialist trading. We teach you how to react. We teach you how to spot these things without the aid of trying to figure them out or looking for reasons such as fundamental news or such as worldly events which cause things to happen. Now here's a chart of Apple, a current chart of Apple. As you can see, it's been a tremendous sell-off. The trend is obviously down. So in other words, the first question was, well, are big players doing this? Well, we really don't care. As you can see, once again, it doesn't matter why it's raining. It's just raining. Big players, another way to describe that would just be, selling pressure. Obviously, there's selling pressure. And so you'll see this on the charts. I believe the second question was, what do we see in the charts? Well, you'll see something like such as this. This is a sell-off. This is whether it's on a 5-minute time frame or a daily time frame, as you're seeing right here. This is a massive sell-off. It doesn't matter what time frame the bars are. They're all pretty much going to look the same. The main thing is we want to see is, are there warning signs? Are there any way I can protect myself while I'm in this? So it's easy to see, in other words, once it's happened, but how can we protect ourselves prior to this? Well, this is where specialist trading training comes in tremendously helpful. Now, what if you, after seeing this, were an investor in Apple and you've just lost a good 200 points roughly on your investment? What if you could have at least gotten out of your investment right here? How would you have had a warning sign? Well, why would you know to get out there? Is there any particular pattern? Is there something you see there? Well, let's go to our number one edge, our number one tool at specialist trading, the buy-sell line, which is the 50-period simple moving average. If we simply apply that, the rule is if price is below the buy-sell line, we're not going to look to go long. We're simply going to stay on the sideline, stay out of trouble. If we are currently long, we're either going to exit our trade or we're going to tighten up our stop so that if things go against us, we just lose a little bit. So there was your warning sign right there. 2 consecutive closes below the 50-period simple moving average. Doesn't get much better than that. You could have saved an extra 100 points on the downside of Apple. All of our members were alerted to get out of Apple roughly around beginning of October at 640, 650. And look how much it would have helped you within the coming month. Now this just doesn't work on daily bars or at stocks. Let's go to the E-mini. Let's look at an intraday trade, a 5-minute chart of the E-mini. Chart looks very similar. We've got real sell-off type of action on a 5-minute time frame. The market's going through a major sell-off here. It really dropped roughly about 20 points in one day, 20 E-mini points, which is a lot. Now, is it the big boys doing this? Is it the big accounts? Who cares? It doesn't matter. Once again, it's raining. We don't care what the reason is. We just know that the charts are going down. This is selling pressure. So who cares what the reasons are? We need to react while this is happening. Well, could there have been any early warning? Well, what if I would have said, well, right here is where you should be getting out of all long positions, okay? And you look and you go, wow, that would have been a great warning signal. How could we have done that? You apply the buy-sell on, the 50-period simple moving average. Look at all of the consecutive closes in the first half hour of the day, which told you I shouldn't be long anything. I should be on the sidelines of the E-mini for today on an intraday trading basis, or I should be looking to go short. So I think the last question the student asked was, how do we trade them, if at all? Well, if it's a sell-off, and if we always trade in sync with the trend at specialist trading, then this is a great tool telling us that we should have been short all day. So if you're in our E-mini college, you know that would have been a number of signals here to go short on a 5-minute time frame. So we love sell-offs. Sell-offs are a great way to jump on board on the downside and make money. You could have made a lot of money on Apple as well, looking at that chart, had you wanted to go short. All right, now how about our Forex members? Well, let's look at a weekly chart, a more longer-term chart of the Australian dollar. Obviously, this was in a really harsh sell-off here, going back about 4 years to 2008, 2009, roughly. We see that the Australian dollar just fell out of bed, a massive sell-off on a weekly basis. We've shown you daily, we've shown you 5-minute, now on weekly. So once again, obviously, there's selling pressure. Is it the big boys? Is it the huge accounts? We don't care. Once again, it's raining. We have to get out of the rain. How are we going to react? Okay. Well, could there have been a warning sign that at least I would have lost all of these pips, 4,000 or 5,000 pips, by holding on the Australian dollar as an investment tool? Sure. Here was a great warning right here. What if I could have said that this is where you should be getting out of the Australian dollar? And if you were aggressive, where I would have said this is where you start looking for short signals. Well, we add the buy-sell line right there. There's your warning. That's telling you you should be out of the Australian dollar on a weekly basis. And if you are long, maybe take some of your profits off the table or tighten up your stop. Or if you're thinking about going long, forget about it until we go back above the 50-period simple moving average. So that's how simple it is. You see how we don't have to concern ourselves. Once you start looking for reasons in these outside sources, in this noise that we label as noise, you're turning that into a crutch. And so you have to wait for those reasons to substantiate themselves before you can do anything. Well, by that time, the market has tremendously sold off. We don't want to wait that long. We have to react, especially in a very fierce sell-off, whether it's a 5-minute sell-off or a weekly sell-off, as you see right here. Now let's look at the granddaddy of all sell-offs. This was 25 years ago last month. This was the crash of 87, October 19th, 1987. As you see here on that date, we really fell out of bed, over 22% in one day, which at that time was 508 points. If we correlated that to today, that would be over 3,000 points in one day to the downside, okay? And this isn't even counting all of the selling pressure that was prior to that day, all right? So the weeks ahead, we had already fallen out of bed, roughly 500 points, or that would have been comparable to another 3,000 points in the Dow today. So just imagine in the last 2 weeks we're down 3,000 points in the Dow, and in one day we're down another 3,000 points. So 6,000 points in about 2 weeks. At this point, it's too late to try and figure out what the reasons are. It's too late. Once again, you're going to be a day late and a dollar short. What we have to do is react. We're standing in the rain. We're getting soaked. We can't sit there and try to figure out what it is. It's useless. We have to hurry up and react, especially in very strong sell-offs like this. So what if there were some type of tool that could have at least gotten us out a couple of weeks earlier? Like say maybe right here, where we could have saved some of our profits if we were individual investors and really tightened up our stops so that we didn't get hurt at all. Well, there was, once again, the buy-sell line. Had we seen this during the crash of 87, you wouldn't have been long at all. You wouldn't have lost over 5,000 points in the Dow. You would have been either on the sidelines or looking to get short. Now, let's take it even one step closer. Let's take it to the last question. I believe the last question was, Steve, once we have any warning signs about these sell-offs, how do we trade them, if at all? Well, this is once again what we teach at Specialist Trading. This last week, this was the news that came out on November 7th. This was on Wednesday, November 7th. Dow plunges more than 300 points. This was in the Los Angeles Times. Stocks on Wall Street plunged more than 300 points today, a day after President Obama's re-election, as the so-called fiscal cliff took center stage as a threat to the U.S. economy. The Dow Jones Industrial Average fell about 2.7% about 2 hours after the opening bell, sliding below 13,000 for the first time since early August. So for those of you who like to know the reasons why, well, you would have found out the reasons why. The only trouble is you would have found them out 24 hours after we gave all of our E-mini course members a sell signal. So in other words, we didn't know who was going to win the election. We didn't really care. The market, which was the only thing we listened to, it's the only thing we care about, told us the night before on the 6th, it told us to tell our members to go short on the 7th, just about on the opening of the 7th. And it told us exactly where to get short, as you see here, if it trades at this point, where to place your stop and where to place your exit point, or where to get out. So we knew this a full day ahead, as you see right here on the 6th of November, which was Tuesday night. We told all of our members before election results, this was actually at the close of Tuesday, so it was way before there were any results coming in. It was 1 p.m. Pacific time. We issued a sell signal to all of our members to go short, all right? So as you can see, we're below the 50-period simple moving average, and according to our proprietary level of the strategy we're looking at, strategy number 7, it told us that this is a prime shorting opportunity. So this is what we teach at Specialist Trading, to listen to the market, not to wait for answers, not to wait for signals that are coming from outside sources, and not to turn those things into crutches, but basically just to learn and listen to what the market is telling us. So we went short, and look what our members did. Well, in the next couple of days, in 2 days after the signal was initiated, you would have gained over 40 E-mini S&P points, just in 2 days. Okay, this was an actual signal that was generated. So once again, this was without trying to figure out why. We had no reasons why the market was going down. The election results hadn't even come in yet. In fact, once again, it was about 7 or 8 hours prior to any results coming in. We just saw and listened to what the market was telling us, and was telling us to go short. All right, so ultimately, when we go back and look at this question that was addressed by a student, it's a very good question. It's a very common question. Once again, these were the same questions I asked my mentors when I was starting out trading. I always wanted to know why. Why did the market go down? Why did it go up? Why is it acting this way? What the same thing I'm teaching you is the same thing they taught me. They said, Steve, your job is not to try and make sense of the markets. You'll just be spinning your wheels. You'll be at the leaf at the mercy of the wind, because you'll be coming up with explanations, and you'll go this way. Then the explanations don't work, and they go the opposite direction, so then you'll be going the opposite direction. You'll be like a pinball in a pinball machine. You don't want to do that. Your job is not to try and make sense of the markets. They said, Steve, your job is to simply be in sync with them, the markets, and you'll eventually make sense from the markets, meaning dollars and cents. So that's the entire philosophy behind specialist trading. We don't care what the market does. We don't care if it goes up. We don't care if it goes down. We don't care what the reasons are. Remember, don't waste your time trying to figure those things out. You'll come up with 1,000,001 reasons why it did this. Same way if you're standing in the rain getting soaked, you'll come up with 1,000,000 reasons why it began to rain. And the whole time you're trying to figure out why it's raining, you're getting soaked. Remember, you have to react. And the markets are too quick to just sit there, because if you don't react, you're really going to start taking up some major losses. The main thing is just try and make sense by being in sync with the market, rather than trying to come up with explanations. And eventually you'll make dollars and cents from the markets alone. Okay, this concludes our weekly stock, E-mini, and Forex lesson. Our question today was, what are the reasons behind a sell-off? Remember, learn to listen to the market. One of the best ways I know how to learn to listen to the market is by studying and figuring out how to trade our strategies, because our strategies tell you how to listen to the market. And once you fully understand the rules, and most of our strategies had no more than 5 or 6 rules behind them, very simple, very basic, paper trade them. I know of a lot of students, regardless of which course they're in, they trade too quickly. They jump in without really fully understanding the process. Our process here is very simple, but you can get in your own way by doing it too quickly. So I want you to paper trade first. Whether it's a week or a month, it really doesn't matter, just so that you really fully understand it. And that's how you'll gain the specialist edge, which is consistency. From time to time, you may hit some home runs, just as the home run we hit here the other day, where I showed you in the short trade for the E-mini course members. But most of our trades are just singles. They're anywhere from just some small little gains to some small little losses. But over time, they add up to that consistency. Now remember, should you have any questions concerning what I went over today, or anything on the website with any of our strategies or tips or techniques, please do not hesitate to email me at stephenprimo@specialisttrading.com. In conclusion, I ask that you take one last look at our disclaimer. I showed you performance results and how to spot sell-offs, but please remember that we can in no way guarantee that any of these results will be repeated in the future. Thank you so much for attending today. I wish you the best of luck trading, and we'll see you right back here next week. Bye-bye.